Gold is in an incredibly powerful position right now, and here's why. First, this year we've seen a historic shift. Foreign central banks now hold more gold than U.S. treasuries, a status they haven't seen, I think, since 1996. That suggests a profound rebalancing away from dollar-linked debt and towards tangible geopolitical proof assets. What's notable here is that back in 1990s, when market confidence in traditional reserve assets also shifted, gold wasn't center stage, and it wasn't really in the limelight. Right now, though, what we're seeing is that on top of that backdrop, gold equities are outperforming even the bullion, which has been doing astonishingly well for years now. The New York Stock Exchange ARCA Gold Mining Index is up over 50% year to date versus gold itself at around 25%. The divergence underscores the operational leverage on display. Miners profit disproportionately from rising gold prices, and many are disciplined with capital returns. This is key with the guests we're going to have on here. Couple that with the entire structural demand, as we've talked about, we have a real durable hard asset allocation trend that is occurring. So gold today isn't just a hedge, it's center stage in global capital recalibration. And with me is Luke Norman, chairman and co-founder of US Gold Corp. It has its CK Gold project in Wyoming, fully permitted gold copper mine targeting first gold concentrate by 2028, with key engineering as of today as well. Some updates on that are emerging as a compelling, very near-term production opportunity with U.S. hard assets. Luke, how are you? It's a real pleasure to get to chat with you.
Same goes, Andrew, and I'm doing quite well, actually. I tell you, if you told me a year ago I'd be sitting here in a summer bull market, you might have brought a tear to my eye. It's been a tough decade preceding this.
It really has been. And there's so much to uncover with your story, because this is you can count on half of one hand how many projects are this near term and this close. And you get the added benefit that you're a U.S. company, U.S. asset in a very friendly jurisdiction.
Yeah.
And people that are looking at some of the stocks that maybe they've missed out on, like, Newmont's done really well, or like Nico's done fantastically well. You certainly have as well, but you've got a lot of catalysts that remain that I'll let you speak to for someone if they think, you know what, I need a good capital structure, a stock that has some growth, that can have some production and participate in this operational. And that's key, because that's a key factor with your project that is really, to me, an eye opener as well. So with that backdrop, tell us a little bit about just how this came about and the story behind the property here.
Certainly, but I will touch on one thing really quickly. Yes. Firstly, Andrew, in your intro, you were talking about how gold equities are outperforming the price of gold right now. I would say more, they're just playing a very slow catch up to it. But, anyway, that's just a perspective on it. Yeah, look, we are in an extremely unique situation, of course. As you mentioned, I think we could even see production before 2028 on this project, but let's not push numbers like that around right now. We listed on the US for very good purpose, of course, because of the location of the asset. The company that I was a co-founder of previous to this, Gold Standard Ventures, started off on the TSX, but we really got our traction in the US when we uplisted to the NYSE Market Exchange. So the view from the get-go, when we decided to really hinge and focus in on CK, which was only 4 years, or coming up on 5 years ago now, mid to late 2020, when we entered into it, was a complete pivot away from exploration, which was our forte previously, into development. And look, it's been an incredibly fast, I guess, process relative to our peer group. And again, that's all down to the location. I know we're going to talk about that to a great extent today.
Yes. So what's interesting, this usually it's a drill story we're talking about and assay results. And I can't not mention that the one of the highlights from years ago was 182 meters at 2.065 grams per ton gold.
Yes.
So significant. So just so people have a bit of a sense of what they're dealing with and what they're talking about, because we have to reframe this that usually I'm talking about, they're expanding, they're doing infill, they're doing this, they've got assays coming. This is you've well beyond that. You already have that. This is great. You've done a pre-feasibility study as well. but you're really ramping this up to be in production and take advantage of this. I mean, I would say long-term bull market we're entering.
Well, you know, you got to take into consideration first and foremost our CEO, who is George B. George has built some of the largest gold mining operations on the planet. You know, he was a 16-year veteran at Barrick. His actually soiree into Barrick, his initial first job at Barrick was turning what was then known as Betsy Post, a lump on the North Carolina Trend into what is now today Goldstrike. Then he picked up tools. He moved down to South America for Barrick and has built some of their largest operations on the planet. So I'd say the guy knows how to dig a hole and generate value. It'd be a fair statement. So when I dragged George back into business to take the helm of this company, you know, he was actually the one that was pushing me. He said, we can permit this and it's going to be highly profitable. And as we looked at it, you know, Andrew, you brought up about the high grade intercept that we had right through the heart of the deposit. But, you know, it is a lower grade deposit overall. I mean, it's got wonderful mineral distribution, but people look at grade and they think, oh, that would be a challenging grade. Well, you fast forward today, as you mentioned, the project's through pre-feasibility. Our latest iteration was just February of this year, but we're all the way into definitive now. But the pre-feasibility was not based around a resource. This is reserve grade materials. You know, we're classified under SK 1300, not NI 43101 in Canada, you know, because we're US listed. So it's just got slightly stricter guidelines. So we took the reserve that we have right now, which is pushing around 1.6 million ounces of gold equivalents, is just a drill to find reserve. We didn't go chasing additional mineralization to depth. There's lateral extent to it. There's a heck of a lot more upside to this project, which is great, exciting for everyone who's invested in the company. But just looking at the economic framework that we have right now, which is and you can see it on the screen, I'm sure, a 10-year mine life, producing around 110,000 ounces gold per annum, and a very low all-in sustaining cost of $930 an ounce. And actually, even more, I think the headline grabber that creates a little bit of static for us is the low capex, which, you know, for people who don't understand some of these acronyms, you know, capex, of course, being the amount of money it's going to take us to raise to ultimately develop and put this into production and start cash flow. And people see that $277 million number and they think, well, how are you going to achieve that? Because every other, you know, 100,000 ounce producer costs far more. So, you know, and I can touch on these, but ultimately, we are very far along in advanced engineering, and really we're just doing the final contract work now to go ahead and commence production. This is a great case study with all the work I've put in. We threw it through our drill sheet model as well, just to kind of really hone in on things. It is one of these very captivating stories where I'm reminded by Doug Silver. We did an interview with him about 7 months ago, and he sometimes you think of these giant, like 5 million ounce people are going after, or 8 million ounce. You go, only 5% of the mines out there are 1 million plus ounces. So you're already in the upper echelons of like pay attention mode. And I think sometimes I forget that you go, you've got that already. Boom, 110,000, hopefully a year for the next 10 years. It is that the economics of it, which once again, people always think, oh, I have to look for the highest assay numbers, the highest grades. And it's like, maybe, I mean, if you're up in the mountains of the Andes, okay, yeah, you're going to have to, it's going to be very compelling. That's the thing. Exactly. But that's exactly it. It's not all grade is created equal. And actually, this is a great slide for us to touch on. And then maybe we'll skirt back to the PFS numbers after I speak to this. But you can see here, this is our pit shell. And you see the mineralization just end at the bottom of the pit shell. Well, it doesn't quite work that way geologically. That's just, we did not continue to chase the mineralization because we could have spent another $20 million continuing to build and grow a resource at the time, when we needed to establish a reserve, and we needed to then prove that we could permit this, because there was a lot of questions around, hey, we're going to be the first hard rock mine in Wyoming in 100 years. The name you mentioned, Doug Silver, earlier. Doug actually came in and was an intermediary between the company and the state of Wyoming just to establish a net smelter royalty schedule on hard rock mine because there hadn't been one in 100 years. So yeah, we are purely just drilled constrained around this deposit. And 1.5 million ounces, there's a very good chance there's 3 million ounces there. And we'll work towards showing that to the market later. But right now, I think it's more of a, they want to see us show me, and please, Adam, if we could just skip back a slide to the PFS headline numbers. People just want to see us now go from a pre-feasibility study to a definitive feasibility study and maintain the integrity of this kind of cost to, or this margin that we've established here. And we showed it 3 years ago in a previous iteration of pre-feas, but they now want to see that in the definitive. And they want to see, how the heck are we going to build this thing in the realm of $300 million? And look, that lends itself really nicely to our location map, which I think we should definitely touch on today, is just the importance of the location of this project.
Well, we're going to jump around a little bit too, because it just is bringing up all of these things that when you first look, you think, oh, this is going to be a problem. And the obstacle, as one first looks, actually becomes a huge benefit, which is what I find so fascinating about this project. Because you go, okay, you're so close to Cheyenne. Okay, great. It's close to infrastructure. It's close to crews and to get to, but it's also close to a national park. Oh my God, this is a disaster. How are you ever going to get permitted? Yeah. But you guys, and it isn't that you've just got a permit to drill or a permit for this. You're fully mine permitted to go. So maybe touch on how that came about, because that's a big deal to have fully mine permitted.
It's a very big deal. And the first day I stepped foot on this project, I was like, oh Lord, this is, I just couldn't see it happening. And you can see in the insert, we see our project kind of explode out, and a schematic of what the pit, the reserve pit might look like. Just to the northwest of that, you can see a lake. Well, it's not a national park. It's actually a state park.
Oh, state park, yeah.
Kurt Gowdy State Park. And there's two of those lakes. They are man-made water reservoirs and recreation facilities. So, the townships of both, predominantly Cheyenne, they spend a lot of their summertime and fall fishing, hunting, camping in these areas. And it was a real concern. Now, fast forward through the process of establishing the reserve and then ultimately going into the permitting, is we started very quickly recognize or understand from the Bureau of Public Utilities that both of these lakes are actually not holding enough capacity for the growth that's occurring 20 miles away in Cheyenne. So they're going through a hair-pulling exercise right now where they're considering all sorts of options on how they increase their water capacity. And one of them is to increase the dam heights at both of these reservoirs. And in doing so, it floods the park and floods the recreational facilities. And it's a multi-$100 million undertaking. Well, fast forward to today, and that pit in the outset there, it's again, just based on the reserve alone, it's 86 acres at surface, but 700 foot deep. It would more than double the water capacity. It would retain, it's a wonderful, benign granodiorite that our ore body's hosted within. It would hold potable water, but even beyond that, we're surrounded by a big wind farm just across the I-80, and they do tremendously well with pump storage facilities. So you could actually be just pumping fresh water between the reservoirs and our pit post-production. It's saving a park, and it's helping with green energy. So it's a pretty remarkable project.
It's amazing, because you would think, oh, someone's just trying to greenwash. It's like, no, that's literally the plan. That's how this is working out. And in part, and you touched on it, it's because of the metallurgy that you've got. And we will jump into the Jameson self-flotation. Maybe you could explain to people what that is and how it works and why that matters. But you've got a clean ore body, essentially, for the most part. And that leads itself to that you can work with this kind of water ESG play. And it's not only is it not taxing on the water system, you're actually adding a value back to the entire state and to Cheyenne in particular, the other city nearby.
And look, this is a great slide just really quickly to talk to is the amount of social outreach that we really embarked on right from the get-go, because we didn't want to scare people into thinking we were just coming in and going to run roughshod around the place and just make it a disaster if it surrounds, of course. So we really needed to explain to people everything from, we put a website that was for the local community. We could go on and understand from the simplicity of the mining process all the way to, how often, how much truck traffic there's going to be, or what the blasting impact might be from a sound perspective. Are you going to hear trucks beeping, reversing all night, all these different items, right? So once we got comfort with the community that this was going to be okay and it was not going to be highly impactful to them and it would have these additional benefits, then things really moved along quite quickly.
Now you put out a news release too, because everything ties in together. But you're leveraging this permitting as well. You see, there's some engineering news today in regards to power as well, which is obviously vital. But that's kind of hints at people that this is moving along. Rapidly here.
No, we just signed with Black Hills Energy. They've got a substation 16 miles away from the project line. It was always established that they're running the power to the project, and we're paying it through amortization by our kilowatt hour price at the gate. So we don't have to come up with $100 million to transmit energy into the project or any of that. That's going to happen through just our power usage, and our power usage costs are extremely low as well. That's again the other uniqueness about the site of CK is, we're right off the I-80 corridor. We've got Union Pacific and Burlington Northern Santa Fe rail within miles of the project. So getting heavy equipment in there is a nothing. 20 miles out of Cheyenne is a major industrial hub in the resource sector. A lot of coal, trona, other forms of resource exploitation going on in the state of Wyoming. So what that also means is there's fuel refineries where we've cut a deal with a neighboring fuel refinery. We've got Dyno Nobel, the explosive company, have a factory just 20 miles away from us. Big steel fabrication plants that we're going to use for bringing in building tanks and different aspects around the project. So the project becomes kind of a gig employment project, and that's where the costs really come down in a situation like this. If we were sitting up in the snowfields up in northern Alaska and trying to bring this equipment in and specialized personnel, the fly-in, fly-out costs, transmitting power, you would have a capex that would look more like $700, $800, $900 million. When you can bring in employees and they're going home at night, we're busing them in, they're sleeping in their own beds, they bring their packed lunch, it has a massive impact.
And a lot of those workers too, like they could be contract workers. Like if you need to call in someone's specialty, like once again, you're not saying, oh, we have to call someone in Vancouver, or to hop on a plane, fly up, fly back 3 days later.
And we're an hour and 15 from Denver International Airport. I mean, it's just a very unique location. We're right. Thank God it was not discovered across the Colorado border. It would never happen. But thanks for being in Wyoming.
And an added benefit to this, once again, tying in the pre-feasibility study, and I know you're getting towards the definitive, is that there's all these bonuses. And I'm going to kind of say to some degree that the copper is a bonus, because it is a porphyry. So like we'll get into that, that there could be a significant upside. Porphyries tend to be big, they tend to be clusters. So there is a possibility there, but just as what you have right now, between that and the aggregate, like that alone, it's not in the feasibility study, is like a bonus of a significant value bonus that can be utilized in lots of different ways. That maybe we'll let you start off with, and we'll banter some ideas around, because it is significant. It's not small, and it isn't the play. This is a gold play with a copper and an aggregate kind of backstory.
Yeah, and we even downplay the aggregate now, which is funny because I couldn't shut my mouth about it a few months ago, but I've learned to. I'm slowing to, but if we could actually go back to the locations map, it would be very helpful to explain this situation. But again, all the way down the West Coast, Washington, Oregon, California, good luck. You can't go into the old riverbeds. You can't go in and start new quarries. Getting aggregate sources is extremely difficult all the way down the West Coast. Well, then include into that Colorado. So like I mentioned, we're sitting right along the I-80 corridor, but what you see when you see our land insert there is just to the south of us is a quarry that is harvesting a very similar granodiorite to our host rock. And it's owned by Martin Marietta Materials, and they're a $50 billion New York Stock Exchange listed materials company. And they are, again, harvesting just aggregate. and by way of open pit, and they put it onto the rail line, and it runs down into the Colorado Front Range and also westward out towards California. So they have a great relationship with Union Pacific and Martin Marietta. Well, we were approached by Burlington Northern Santa Fe, who run just to the north of us, about 5 miles to the north of us. And they're like, hey, we want our own source of aggregate. We want our own source of rail ballast. So we started doing all the different tests that you have to do for the competency of that rock. Will it handle abrasion? How much moisture does it hold on to? Is it going to leak acid everywhere? Well, again, a low sulfide deposit, we don't have that problem. Otherwise, we'd have much higher grade. But so it works in really nicely. So now we start looking at what's the price metrics on this. Well, lo and behold, just within our reserve report, we have 40 million tons of that we've paid for to harvest. And the plan was just to put it back in the pit. Well, that's $20 to $25 per ton rock. So you're looking at an $800 million to $1 billion in situ value of material sitting on surface for free. Nowhere in the economics, nowhere in the pre-fees. So now we want to use that. We're thinking, well, look, we're not a materials company, Andrew. We're not going to try and get into marketing aggregates into construction, but we do. Our mine is by design built through contract miners. So we've had all sorts of huge construction companies come in and tender bids on that contract mining. There's a lot of heavy equipment sitting idle right now in the state. So a lot of interest in it. And some of them started to poke their heads up and say, hey, we would be interested in taking your waste material in payment for extracting your ore. And how that ends up shaping up, we're starting to work towards getting into some real definitive discussions on that also. But let's just leave it at this. It's going to have a huge effect on helping to bring down even further our already very low mining costs. So it's going to just have a huge effect economically on CK moving forward. And it generates royalties again for the state and for the township. So there's a lot of support for it.
It's really cool to see the interaction of all those things, and especially that construction grade. It's so positive. And also, I think in the PFS, is it like 268 million that upfront construction and whatnot factor? Is that
277 million?
277. Okay.
And that, look, our previous iteration 3 years prior was 222, and look, that number is going to be higher. There's just no question. But we're constantly optimizing in and around the design that was even just in the pre-feasibility study. And you brought up one of those optimization studies, which was ultimately a press release we just had a week ago, the Jamison cell. We are constantly looking for ways to bring down the costs of development and ultimately production. And we are finding new little nuances every day.
And that's why I want to kind of bring it back in, because it's so interesting to look at the financing possibilities and options out there. Mm-hmm. There's no end to structures and ideas that you guys could bounce around between some equity, some debt. But having that and knowing that you've got that, you could simply go have offtake just for that and work out deals separately and say, well, we don't have to go to a bank. We don't have to go to here. A large part of this, we're already, fine pre-packaging and some sort of project financing with the on-offtake agreement already, which is a very interesting, compelling model to, once again, an already low upfront cost anyway.
Well, okay, so let's look at it. For one, the copper concentrates business is in a real tough shape right now. There's a real shortage of copper concentrates globally. So I'd say that the leaders, front runners in terms of interest of financing this operation is obviously the off-takers. Everyone needs a really good concentrate. This concentrate is extremely clean, very light in fluorine, other things. It's just extremely clean, and you can mix it with lesser grade concentrates, and ultimately it just helps them deal with other cons. So there's that aspect or potential for financing, absolutely. But copper and gold, and now we contain silver in this deposit also, are all critical minerals in the US, right? So there is potential for us to talk to the feds about fast tracking this project, because I know that this current administration are extremely keen to get production, development, and things moving ahead, but you can only push a rope so fast, right? Most of these projects have been held up in permitting purgatory, as we quip about it, in the federal bureaucracies for decades, for decades. And we're ahead of the pack. Yeah, it's a smaller scale operation relative to, some of the big boy projects that have been looked at in Arizona, et cetera. But that also adds to the fact that this is highly impactful for the local community. It's got all these additional ESG merits and benefits to it. So now we can go out, we can talk also on a state level. The state of Wyoming have precedents in terms of being able to put up to 50% of CapEx by way of municipal bonding if they're interested. The state also last year announced that they want to start their own gold reserve. So
very interesting.
Yes. So there's so many serendipities around our little engine that could right now that I think, you're going to see a non-traditional source of capital funding for this project, and it's not going to be heavily dilutive on the equity. And I think that would be, again, a really good segue to talk about the capital structure of this company. Because
yes, please, thank you. I'm glad you did, because I always like to point out to people the opportunity for a retail investor. Like, can I make money in this? Like, yes, there's a lot of catalysts, and I'll let you speak to how you've managed to hold it tight and hold it together.
Because we're stingy.
Because
we're shareholders.
Yeah.
We are shareholders, right? So we are aligned with our shareholders. And a lot of these companies who have been through the last 10 years of desert, of just horrible, capital markets in the metals and mining space, their capital structures get blown out, and then the principles behind the company, their share ownership no longer really has bearing. So it becomes more of a lifestyle ownership.
Yeah.
So they throw money in the company as they need it, as they want it. They don't worry about the share price as much anymore. It's the opposite for us. We all have a vested interest in this project, and we are co-aligned with our investors. So tell me how many junior mining companies you've seen that have raised upwards of close to $60 million, this is US dollars, on their project in the last 5 years, and we've managed to keep the stock down, the amount of shares issued and outstanding to 14 and change. And it is literally that. We know that we have all the goods within the project. The only thing that you get with having a really tight share structure like this, and it definitely warrants me discussing it, is you get this high share price, and that's where people get confused.
Yes.
I think we're trading as we speak $13 and change. People think, I'm not going to buy a 13. Well, it's more of a Canadian perspective, but they think, I don't want to buy a $13 stock. It's already valued.
Yes.
In the US, they think, I want to buy a $13 stock because it's going to 50.
Yes.
And that's the right approach, because when you look at our actual market capitalization, it's pretty low. We only have a market cap of around $180 million.
Yes.
Now, that's about $100 an ounce in situ just around a reserve, which is a ridiculously low number.
Yeah.
I think as we get through definitive and we show a clear pathway to financing this thing, and with everything that's going on with our NPV, with what we're going to do, well, how the NPV will react, plus what we ultimately hope to do with the bulk commodity, that's the aggregate in terms of partnership with a large materials company or whatever it be, we're in for a huge re-rate. And this company should be trading, in the $400 million plus market cap range, really, at a juncture like that. So I think there's a lot of untouched value here.
Absolutely. And for any of our subscribers, anyone who's watching, we're going to have an article out in the weekend where I'll just play around with some theoreticals with it as well. I won't put you on the spot, but we've got like numbers from Paradigm Capital as far as net present value of aggregate that we can use. We can also just look at typical companies that go through different stages and re-ratings whenever they hit certain markers. And I can tell you already, I've already played with the numbers. It looks good. I would check it out, but we don't want to talk. We aren't going to say, price of the stock, but this certainly would be a case for a strong re-rating once all of these things start coming to fruition here. And it is so important to remind people, and tell me if I'm wrong, is it 40% ownership of management internal?
No, sub 20%, unfortunately, but
okay,
it's still enough. Hey, it's still enough to matter.
No, that's great. But it shows that, once again, is there room to make money in this? Yes, if you keep on the path you're going, once again. And we're not even touching on, which I want to remind people again on this being a copper porphyry system that extends. So at depth, and I know that you guys had stopped doing any exploration. That is a lot of your forte because you already have something to build upon. But I also want to stress upon people that when they hear that, they sometimes think, "Oh, that's the end of the story." That is not the case with you guys. There is a huge pathway to mine life extension, and this is what also makes it an interesting story: is that you're looking to get it producing. I think was it free cash flow by like 1.7 years down the road? Like it's pretty quick. Yeah, that could fund exploration.
We actually felt that was conservative, but
yes, that is conservative as well. And I mean, I always would rather be very conservative and things go farther up. But you've got all these pathways that is so unique, and it is so near term. To find a company is extraordinary. Maybe touch on some of those comments, and then we'll jump back into the Jameson thing because that's important because it touched on the silver content because maybe that unlocks more silver.
Yep.
Okay.
Yeah, so look, yes, ultimately, CK or Copper King, as it's known, and was discovered well over 100 years ago and high graded for some really rich material at surface. And just never really followed up on. Once they got into First World War, Second World War, they shut down all precious metals mining, and it's just one of those overlooked projects. People think that that's impossible, but that's actually how I make a living, is finding overlooked projects, right? So CK itself, that reserve, is really a symptom of something really significant going on in that ultimate area. Is called the Silver Crown Mining District. And sitting across from us is an archaic 120-year-old Heckler milling operation. And there was a township there that these little mining operations fed. So we've got a little symptom of it showing at surface. We have not gone hunting for the roots or the plumbing, as we like to refer to it. I have one, I won't drop his name. There's a little bit of a tease, but I have one friend who's a very, very highly regarded exploration geologist globally. He thinks we're Boddington. He thinks this is just literally CK's a symptom of an extremely rich system. So look, we will go looking for it. But, when I refer back to our stinginess and our capital structure, we just didn't want to go spending another $20-30 million chasing mineralization, then find out, we couldn't get it permitted. And there was all these just different nuances and catch-22s. So we just stuck. Let's get 10 years of mine life. Let's get greater than 100,000 ounces of production. Let's put an economic framework around it. Now let's go see if we can permit this. And that's been the last 4.5 years of our existence. And $60 million worth of capital. We don't need to go back to market and raise that money now either. That money that's been spent. And then people look at, but you need $300 million to build the mine now. Well, again, that's not going to be $300 million of equity off the top. It's not going to be close to that. We've got some really imaginative ideas and ways to fund this, and it does very well under debt.
Yes. And that would be a fascinating conversation down the road. And we're going to play with that in the article as well of interesting things. And you did highlight the market is much more open to these unique structuring, especially when there's such keen interest on offtake. And like you said, there really is. I've looked at a couple of projects in Africa where they've done some really fascinating financing, in the futures market and selling, forward. There's all sorts of interesting things, but you already have, without having to look too hard, you already have the aggregate. You already have a copper offtake that could happen. And you've got nearby, industrial use people that would want that could work in. And I think that adds that economic flavor to this that makes it so captivating to see as a case study where you don't need to have a massive, huge ounce deposit with huge, super high grades, yet it's up in a glacier, where it's like, no, if you have it situated and you have all these angles worked out, it's very profitable. And it's a free cash flow generator, which is something people love to hear. It's a bit of an old thing from back whenever I was young. You want to look for that discounted free cash flow. This is going to be like, I should say, be careful. This has potential to be just a cash flow generator.
And look, U.S. jobs, U.S. generated precious and precious metal. I actually consider copper a precious metal now anyway.
Yep.
I mean, it's got all the right earmarks to really help excite and entice, not just financiers, but the retail investor community. So it's a fun project.
And it is great, once again, for the U.S. to be acknowledging and to be really taking the lead. And I sit in Canada and we deal with permitting issues. I mean, everywhere has permitting, but I look and go, you've done all this hard work during more challenging times. Yep. And we only briefly touched on the Trump effect, which is very pro-extractive resources and harnessing critical minerals. And that just lends itself to it just illustrates you guys made the right decision. Yep. And then the universe is answering. It's all funneling together to present this opportunity that's developing rapidly. And it's developing rapidly, not only in mining terms and understanding at speed, but it's happening. It is fast without the fast tracking of a Trump administration.
Yeah, it is. And like I said, look, unfortunately, but a lot of the great projects in the US that absolutely warrant and deserve development, it's still pushing rope a little bit, just trying to get those bureaucracies that have never worked well together, from forestry to BLM and all the different moving parts. And then you've got Army Corps of Engineers, which is the toughest one. That's if you impact any kind of waterways. It could be just a dry gulch that maybe moves water 3 months of the year and heavy rainfall. Then you've got the Army Corps of Engineers in there, and there's a 3 to 5 year process. It's very hard. And look, it was no less stringent going through the permit process. I really want to implore on this in Wyoming. But the difference is a block and a half away from our head office is the Bureau of Public Utilities and the different divisions within there, from air quality, land quality, water. All the different people are within a building. And when we would hand over documentation and maybe there's a typo or something, instead of with the feds, they'd be like, fix this, and it goes back to the bottom of the pile. There was an open kind of platform, and they have timelines and time frames, and they work with you. So it was how business should be done, and it was pretty impressive.
Well, that's encouraging, because that's the stories we like to hear too, is that permitting should be onerous and very technical, but that it's done fairly. And that's what's happened here. And once again, we've stressed it a lot, but having that permit is massive, is huge. And you're really charging forward with it. I guess, are we still hoping to have a definitive feasibility by the end of the year?
By the end of the year, yep. We've hired on a mine manager who's working between George and the rest of the executive team directly with our 2 engineering crews out of Toronto, the Canadians that are helping us engineer. And then we're in negotiating hard contracts like you just saw the other day with Black Hills Energy. We're getting in and getting deals done locally so that these numbers are not just made up numbers and then you've got to try and make it all happen. These are contractors who are 20 miles down the road who are going to come in and stick with the price and honor their pricing. So,
and that's going to be, if people are saying, well, what's going to be a catalyst? That right there. There's a number of catalysts, but right there to come within any kind of, probability factor. There is inflation and whatnot, but if you can keep it around that number and it becomes definitive,
just those margins, those, ostensibly those margins, we're $937 ASIC, but we ran those numbers at what was the last one we did? 2150, I think. Yeah,
21. Yeah.
So now everyone, is running $2,600 gold. So we've got the metals prices have moved more aggressively than I think inflation has. So I think we're going to more than retain those sort of margins of cost relative to metals price. And we did have a sensitivities chart in there anyway, which shows you, we thought we were being a little bit boisterous when we threw $3,000 in the hypothetical sensitivities back in February.
Yeah.
Now gold's flatlined up in the $3,300, $3,400 range. So this thing reacts. Obviously, we really well leveraged the price of gold. very well leveraged to the price of copper. And the downside, which is also in the in that sensitivities chart, it shows that it still operates and generates relatively good profit at $1,300. So it's not like we're margined to this excessive high, great market price market right now, and all of a sudden that turns and this whole project collapses. It's far from a marginal asset. And
that's interesting too, because I looked up, companies we like, I really like a Kinross or an Agnico Eagle. They're ranging, and I don't want to quote them because I know it. I don't want to say get them interchanged, but they're between 1,000 to 1,400 ASIC. So you guys are below that, which is fantastic. I mean, so I want people to kind of put in mind a comparable of where you guys sit, and definitively once you get it down there, that's a very impressive, runway moving forward. And that's, along with all these other factors, makes this stand out to be a really interesting case study in an economic mine that can happen very quickly.
Yeah, it does. And look, as I sort of touched on earlier, we are continuing to perform all sorts of, other just optimization studies and things that we can do around the project. The Jamison cell technology, for example, means that now we need slightly less warehousing for the flotation cells. We don't need craneage above them because it's a whole different system. So we don't need 26-foot high ceilings. We need 15-foot high ceilings. These things are positively impactful on the downsizing of cost. And we're just continuing to just find new ways to make a good project great.
Maybe let's just jump into that quickly a little bit, and tell me if I'm wrong, but is this Glencore Jamison cell flotation, is this kind of like a smarter bubble machine? Like a bit more like a mister?
It's almost like a soda stream.
Soda stream.
It is. It's micro bubbles. So you're using the same reagents, probably slightly less reagent. There's a chance that it will actually require less grind, but we haven't got into that. Well, we're doing those ongoing studies. But as we ran the material that we had run through the pre-feasibility in traditional flot cells, and then took that same material and ran it through Jamison, we got better recoveries. We didn't really get into that in the press release too much because then we're having to retool a pre-feasibility study that's already, we're already past that. We're going definitive now. Yeah. But ultimately it's an enclosed vat, as opposed to having just a big open, traditional flotation. I'm screwing all the terminology up right now.
No, it's okay. But even I like to kind of translate to some retail. Even if you had like a 2 to 3% lift in recovery, that's like that. Once again, theoretically, tens of millions of dollars. That's tens of millions. It's huge. It's significant. And then that I kind of hinted at before. Does that unlock, because we haven't talked so much about the silver, but does that then, once again, that unlocks a lot more of a silver story as well?
It just unlocks everything. Look, you've also got diminished power usage, slightly less water consumption. It's just so many benefits to it. And ultimately, you're coming with more gold, more copper than you were from traditional flot cells. So that's what we want, right?
Yes. Well, this was fascinating, and this is one we've wanted to talk to about, and we lots of questions come in. I think we've hit all of them. Maybe you just kind of run through again. What are some things if someone is looking, they're very interesting, and they say, well, okay, I know that you have a definitive coming up. What are some of the things in the news I need to be paying attention to over the next weeks, months, before the end of the year to see if you guys are on track and on target, hitting the milestones that you kind of put out there that you want to hit?
Just those ongoing little gems like you saw yesterday with us going ahead and signing the transmission deal with Black Hills Energy. People are like, well, yeah, but are you going to build this? Are you doing this? It's still a very tentative market from the perspective that we have been 10 years in a bear market around the precious metal space. There's been still not a huge amount of capital inflows into the institutions that usually deploy then their capital into the equities, into M&A activity, all the different things. That it's still a little bit, guys are on the sidelines because the money hasn't yet come. It is going to come, and that's when you're going to see it get. You've witnessed it before, Andrew. The excitement that can happen. I was in the 2000 through 2007 market. There was a bit of a correction there, 08, and then 09 into 2011. It was just, it's quite a remarkable thing to be a part of. And I think we're still in the very early stages of this bull market. And when people start to see that happening, but sorry, back to your question, for us, little catalysts that are going to come along. I mean, we have the ability, as we're doing definitive, to highlight these things as they occur. So I think those are extremely important, but really the smart money is sitting here watching us get this thing closer and closer to actual development production. And there's going to be a big shift in our valuation at some juncture.
And when we evaluate the merits of what could happen and the net present value and whatnot, that's that's not even taking into account if we get the type of market that we both think is happening and it's coming. I don't know anybody in a space who doesn't think there's going to be north of 3,000 gold for any time. There's no catalyst I see in the economy that screams, hey, let's get back to everyone buying dollars. It's going the exact opposite direction.
And the US being pro resources again, finally, and softening on. I do think ESG is important to some level, but softening on ESG a little bit.
Yes.
I've had big institutions say to me, you guys in the mining sector, you need to work your crap out. You need equator principles. We can't invest in you if you don't have all this ESG compliance. Well, that's softening a little bit. That's going to allow more money to flow. And ultimately, I think that the American investor is starting to recognize that these critical minerals are just as important as energy, as oil. And they've done such a remarkable, we've seen what they've done to protect oil interests for the last 50 years plus internationally. And I think that same approach is probably going to come into the metals and minerals space.
For sure. And it's interesting you brought up that municipal bond angle, because it reminds me too of Florida, where they're taking gold now as cash, which is like, I look at that, put on my kind of forward thinking cap and think, you know what, is this just a test? Like they're like, let's do a test market of Florida to see how this goes. But that's a big recognition. And that isn't just like a small kind of story off to the niche side. That's a big move, that more and more people are becoming more like kind of that 1970s idea of resilient, of wait a second, maybe having hard assets, hard commodities in all the challenges we're facing. Maybe I should be looking at that. And, it's been happening, and it's going to be continuing happening at pace here. And it's really exciting once again to see that you've got, even with the ESG, all of the angles they're working out for you. Like the things that, once again, what we talked on, that we thought this is going to be a barrier to entry, this is going to be terrible, ends up being actually a big synergistic positive plus side for the project.
And let's talk to just really quickly what you mentioned about what's happening in Florida. I've got a possibly even more useful kind of perspective in terms of how to look at it. So what happened is a lot of the retail cash inflows that would usually show up when gold has moved like this and hasn't quite showed up yet was because it was readily sitting on the sidelines to go. Obviously, a lot of that went into cryptocurrencies. Well, we have, as a shareholder, a founder behind the 3 largest crypto miners publicly listed on the planet, okay? And the individual who helped put together all the assets that's in there, in those companies, is a large shareholder of ours. And he quips to me that if you own crypto, you should absolutely own gold. And I think at some juncture, that lesson is going to be learned by crypto owners, that crypto is great to have in a digital wallet hidden somewhere, but to have physical gold as well is really, really big.
Absolutely. We like to hammer that into younger people, is that, listen, I mean, I understand you're end the Fed and you're angry with the money printing and you've gone to crypto, but like there doesn't have to be this clash of either Bitcoin or gold. It's like, no, I mean, they are synergistic and they have the same story. And if you are young, it's the perfect blend of having a basis in reality of the physical world with an object, gold, that always has 6,000 years worth of history of data, compared to a newer asset that is exciting and technologically savvy. It's a great marriage for anyone who's making decisions moving forward.
Yep.
Fantastic. Luke, this was awesome, fascinating. We love what you guys have done and have put together over the years, all the hard work. And if people are interested, we're going to put out a bunch of ideas about what we think could, in theory, happen that are all just, they're just just out there kind of thing. And check us out in Substack to see, and give us a comment. Tell us if you think we're right or wrong. We'd love to hear it. But this is a extremely exciting, near-term, super rare permitted project that is in this blossoming gold space that people are really waking up to. I mean, they're selling out of bars in Costco. It's crazy. So we look forward to more news, the definitive coming out, and I'll leave you with the last takeaway.
Yeah, look, aside from our little crypto digital meets analog discussion, I just think we are right at the cusp of a really big shift in our company. There's already a lot of eyeballs on us. I think you're going to see that culminate into some real storage of value moving forward. So love to have new shareholders. Reach out to us anytime. Anyone who's watched this and wants to know a little bit more about the company.
Excellent. Well, thanks so much. Enjoy the rest of the day, and we'll check out for news real soon.
Great. Thank you, Andrew.
Take care.